Sarah and Elena work on the same floor of a high-rise in Chicago. They both pull down a $105,000 salary, possess impressive resumes, and carry the weight of being the primary earners for their households. Sarah believes she's doing well. She pays her bills, contributes to her 401k, and enjoys the occasional weekend getaway. She views her paycheck as a sign of security. Elena, however, sees the same $105,000 as a ticking time bomb. She realizes that after federal taxes, state taxes, FICA, and the relentless inflation of 2026, her purchasing power is effectively half of what her mother's was 30 years ago. Sarah's sleeping. Elena is preparing for the collapse. The W-2 scam isn't a conspiracy theory, it's a mathematical reality. In the current economic climate, your salary is being aggressively eroded by a combination of bracket creep, rising insurance premiums, and the invisible tax of corporate-mandated urban living. If you're earning $100,000, you aren't middle class. You are the working poor with the nicer title. You are playing a game where the house has rigged the odds against the fixed income earner. Look at the data. In 2026, the purchasing power of a $100,000 income has plummeted, mirroring what $68,000 felt like just a decade ago. While your employer gives you a cost of living raise of 3 or 4%, inflation, specifically in housing, energy, and childcare, is eating that game before it even hits your checking account. You are running on a treadmill that's accelerating every month, but you think you're gaining ground because your nominal number is going up. You aren't. You're just keeping pace with the decline. The trap is psychological. We've been conditioned to view a six-figure salary as the peak of professional achievement. It's the milestone that signifies you've made it. When you finally hit that number, the system encourages you to reward yourself. You trade up for a better apartment, maybe a newer car, or more expensive convenience services to manage the superwoman expectations placed on your shoulders. You're managing the logistics of a household while hitting targets at a firm that views you as an asset to be utilized, not a person to be invested in. You feel the shame of the high earner poverty cycle, where you look wealthy on paper but feel the anxiety of a single missed paycheck. This brings us to the aha moment, the asset mirage. You believe your W-2 income is an asset. It isn't. It is a liability masquerading as security. An asset is something that puts money in your pocket while you sleep, independent of your labor. Your salary requires you to trade your most precious resource, time, for a currency that is losing its value daily. When you rely solely on your paycheck, you are one structuring announcement away from total financial exposure. The structural failure here is that the tax code is designed for business owners and investors, not for employees. The W-2 system forces you to pay your taxes before you even see your money. You have zero control over your tax liability. By contrast, a shift toward 1099 structures or building an asset-based portfolio allows you to control your deductions, manage your risk, and protect your capital from the inflationary pressures that are currently crushing the average professional. You need to stop viewing your salary as your primary wealth driver. It is merely your seed capital. Your real work begins with strategic resource allocation. This means treating your household as a corporation. If your corporate employer were in your shoes, losing margin to inflation and taxes, they wouldn't just work harder. They would cut overhead, optimize their tax structure, and pivot to higher margin activities. You need to do the same. Start by auditing your invisible sinkholes. Review your last 3 months of spending. Are you paying a premium for convenience because you're too exhausted from the corporate grind to cook or manage your own maintenance? That convenience tax is likely costing you thousands of dollars annually. That isn't just money, that's the seed capital for your independence. Every subscription, every automated delivery, and every unnecessary upgrade is a leak in your architectural integrity. Plug the leaks first. Next, shift your mindset from saving for the future to buying autonomy. Saving is a loser's game when inflation outpaces interest rates. You need to focus on acquiring assets that cannot be touched by corporate restructuring or currency devaluation. If you have a $100,000 salary, stop trying to maximize your 401k and start looking at how to move capital into structures that offer tax efficiency. You are playing a professional game. Stop using amateur tactics. The shame you feel about the weight of your family's financial stability is not a reflection of your failure. It is a reaction to a systemic trap that is designed to keep you within the walls of a corporate office. They want you stressed, busy, and just comfortable enough to stay. When you realize the system is the problem, the shame disappears. It's replaced by a cold, sharp, and necessary clarity. You are not an employee, you are a resource manager. You need to start allocating your capital like a CEO, not an individual contributor. The moment you stop chasing the high earner status symbol and start building a fortress around your actual wealth, you will realize that the W-2 is not a career path. It is a waiting room. You are only surviving if you are waiting for a bonus that barely covers the cost of living. You are only thriving if you have built a system that functions without you. Change your metrics. Stop looking at your salary as the ultimate goal. Look at your burn rate versus your asset-generated cash flow. If your assets don't cover your basic living expenses, you aren't wealthy. You are just a high-status laborer. Make the switch. It isn't about working harder. It's about working in a different direction. Stop asking for permission to be wealthy and start architecting a life that doesn't require a paycheck to sustain itself. The data is clear. Your next move is up to you.